GM everyone. Welcome back to the Ladders Club and welcome back to Fundamental Wednesdays. We did not do a show last week, but we are back here and we're going to be talking about a very important narrative meta which is running right now in the crypto markets, and it is on-chain inference, the AI inference trade, which is not only in crypto but entire tech space, and everyone is talking about it. I'm going to quickly share my screen and show you this. Token used by AI agents is expected to multiply 24 times by 2030. And this is a study from Goldman Sachs. Now, what is a token? That's a very good question, right? Token in AI inference is the fundamental unit of data processed by large LLMs. All right. Now, this is basically the Lego brick, let's say, and it is going to increase from here, which is here. It is here in 2026 by 24 times in 2030, and this is absolutely crazy. So yesterday there was a news that OpenRouter actually raised 113 million in Series B by Capital GVC. But is this a big news? It is a massive news, because we know that this industry is going to take over, and obviously any industry which becomes big has some kind of trades and some kind of alpha in crypto as well. So this is what we're going to talk about today. If you see how AI inference is going to be increasing right now, AI inference and AI training is literally the same size, and by 2030 AI inference is going to be increasing at a very fast pace. It's a very simple thing, which is you give a command and you get a result. But here we are going to be talking about much more, which is what is happening in this industry in crypto. For that, I've got Rohit, and Rohit is one of the best DGen guys that we know. He's done his proper research. He's got calls. Bro, welcome, and let's go. Let's see what you've got.
Thank you, Kapoor. And that was a great introduction. You speak about AI agents. You speak about how we're in this incredible J curve, right? The consumption of tokens continue to increase. Pair that with this idea that compute is also increasing rapidly. Everybody is going after the compute build out. We've been covering that. We've been talking about that for the longest time. And so we are now at a point where, for the first time, the total compute spent on inference has actually crossed the total compute spent on training. So just for context, when you're trying to build a new AI LLM, right, a new model, the first stage is, of course, training, right, which is basically you're taking in raw data, you ingest it into an algorithm. The algorithm then tries to learn through that data, and then you test it. Once you do all of that, you build what are known as parameters, which are some combination of weights on how the agent is thinking, like it's how it's reasoning. That used to compute, that was the primary consumer of all the compute that we are creating. So think about the billions of dollars of chips NVIDIA is selling. And with the last quarter results just came out, and they did what, $89 billion of revenue, like crazy, right? So all of that was going into training. But now recently, Andre Karpathy, who was the co-founder of OpenAI, and ironically is now working with Anthropic, their primary competitor. So that's a tell. But in any case, he said that now the workflows are moving towards inference. Like 70-80% is the demand from from enterprises is all inference, right? We're also reading about these news stories that came out that Microsoft, GitHub, like other companies in the West, they're now trying to figure out how to reduce their inference costs, because they're just going through the roof. So interesting point, like the cost of inference is going down, the compute capacity is rising, and yet token consumption is on the J curve. What does that tell you? And that's the first concept that I want to introduce or talk about, which is the Jevons paradox. So Jevons paradox basically says that the demand for something increases exponentially or way faster than the cost decreases, right? So that's exactly what's happening. The cost of inference is going down, the build out for inference is going up, and the consumption of tokens is going exponential. And what is driving that token? You started with that Goldman Sachs number. I actually want to show you one number that came from Google, which it says that almost a quadrillion tokens have been generated by users using Gemini and other Google models. And that's just one company. OpenRouter had a similar number. I was looking at OpenRouter numbers, and let me find where it is. But 1 second, sorry.
How much is Google again? What was the number from Google?
So Google,
It's
it's 3.2 quadrillion monthly tokens, guy.
and
Monthly
that's only
tokens.
Google. That's only
That's
Google.
just
Yeah,
Google. Yeah, that's
monthly.
just Google.
And
I was looking at data from Open Router as well, and I'm sure it's in the in quadrillions as well. So there you go.
yeah,
Open Router is also at a quadrillion tokens. So this is where we
and
are. This is go on.
now just saying that Goldman Sachs is saying it's going to be 120 quadrillion by 2030, and I think this is still
Yeah, totally
like a
doable.
bit.
Totally doable, and I think it's going to be way more because what's driving all of this? What's driving all of this is not you and I. It's not people who have the Chat GPT app downloaded on their phone and who are talking to them. We don't have the capability to do that. What's driving all of this, I think that it was covered here, is AI agents, right? So Hermes agent, for instance, look at the token consumption. 568 billion of the quadrillion or so spent on open router was routed through the Hermes agent, right? About 151 billion tokens through OpenClaw. So it is basically these agents, these autonomous beings, where you're trying to create like cron jobs, automate, trying to create automation around workflows and processes relevant to your work stream, and then letting the agent do the magic, right? So the agent is magically going through via open router, um, calling in intelligence. Like, let's say if I'm doing research right now for this show, what would I do? Traditionally, I would go spend hours looking at data from DeFi Llama, spend hours reading content on X, go through a lot of podcasts on YouTube to kind of, um, capture all of the insights, and then maybe go into looking at like other sources, wherever, whatever those might be, and then spend a lot of time manually to synthesize, compile, and then have like a list of, okay, these are the 4 5 most important things, right? How many hours would that take? Tens of hours it would take. And I can tell you by
Yeah,
experience, because I used to work with Ernst and Young back in the day, like pre-crypto days. And I was a front-end consultant. This was my day job. I used to get paid to write financial due diligence reports. And that would require me to go through tons of data, do a lot of research, go through the grind basically. And now what these agents have done is they've replaced me completely in the picture. So what am I now? I am now, I call myself the editor in chief now. Like, my job is not to do what a reporter does. I'm not a content writer. I'm not a content strategist. I'm nothing. I'm the guy who at the end says yes or no. So I am that final brain. And Naval tweeted something very nice. I don't know if I can find it, but he tweeted that there are now two sets of people, Kapoor. First set of people are folks who are using AI, who are humans with AI, and the other set are just humans, and we know who's going to
hmm.
win,
Yeah,
right? So
obviously.
this is what where we are right now. So I mean, analysis apart, investment apart, I know that's what who our primary audience is. But even trading, I think trading is going to fundamentally change. It's not, I mean, we're going to be trading for fun, that's for sure. You and I are not going to be sitting in front of a screen and trading. We're going to have a watch list, and the agent is going to do the technical analysis. If you're whether you're a scalper or a swing trader, the agents are going to trade on your behalf, and you can't beat the
Taking my
agents.
job. Taking
Yeah,
my job.
100%.
Obviously, it's
It's
going to
gonna
happen. And
not just your job, bro. Every job that we can think of
yeah,
that falls into the knowledge sphere is all be replaced by agents.
and this is why we are talking about this. And
Let
obviously,
that sink in, guys. Yeah, let
yeah.
that sink in. Let that idea sink in. And there begins our journey. In today's show, though, I want to focus on like three main things. And let me just pull up my entire visual stack so it's visible for folks. So what I want to show you, or where I want to start with, is this table, right? It is the on-chain inference stack. Mm. Um, the inspiration for this research report that I wrote, and the full report is also available on rocklabs.com. I will share a link which will be available for all of you if you want to do a detailed read. And you can find the show notes at the bottom of this video.
Yeah.
But the inspiration, Kapoor, was when VVV started to go crazy, right? So VVV is Venice AI. It's a project which is basically open router, but for private inference. So imagine Open Router. What is Open Router? Open Router is a aggregator of all models, right? So whether it's a model created by Alibaba, which is Quen, or OpenAI, which is GPT, or Anthropic, which is Sonnet, Claude, Sonnet, Opus, Haiku, or it's DeepSeek, right? It does not matter who created the model. Open Router basically has created a centralized API, which gives you in one API access to all the models. That's what Open Router does. Venice is the exact same thing. Venice is an inference provider similar to Open Router. Open Router is also an inference provider. But the key difference between Open Router and Venice is that Venice does it through a decentralized stack. It uses crypto, and we'll talk about how and why. And it is able to offer the same services that Open Router does, but at a fraction of a cost, with some unique features that Open Router at the moment do not offer. Now, before kind of diving into the whole inference stack, what it is and everything, today's video is going to focus on three main areas, right? First, I'm going to talk about the macro setup. In fact, we've already covered the macro setup, which is the rapid rise in AI agent harnesses, the fact that humans are not the ones consuming these tokens. It is AI agents, because to do the work, they need access to intelligence. And to access that intelligence, you spend tokens. So that micro unit, micro currency for an AI agent is tokens. And that tokens need money. And that money is what you and I are spending right now in terms of our subscription for Gemini or Google or Claude, or a pay-per-use business model that Open Router has. You basically, it's like recharging your prepaid mobile SIM, Kapoor. Right? You remember back in the day, we would buy a 20 rupees pack, which would give us 200 SMSs.
Yeah.
And then once that's done, we can't send any more SMSs. This
Yes.
was the
And that's how
prepaid.
this works.
That's exactly what it is, right? So you buy $10 worth of credits from Open Router or
Now we call
Venice.
it credits. That's it.
Now we call it credit, but it's a top up. And then
Yeah.
until your top up runs out, you will have, let's say, X number of tokens that you can consume. So the macro setup is what we've already discussed. The next thing that we're going to talk about is the business model. I'm not going to spend much time on the business model, but I'm going to give you a brief overview of how Venice works. When you understand Venice, every other inference provider that you see on the visual stack, whether it is Near, whether it is Chutes, whether it is Dolphin or Liam, they all operate at exactly same, right? There is no difference, but one gives you clarity. And then in the what I'm going to talk about next is some catalysts, right? Like a lot of people are saying, is the Venice rally over, or what's next for inference? Because degens have short-term memory loss, so they'll make money, they'll dump the token, they'll move on. That's predictable behavior. That's exactly what's going to happen here as well. But there are catalysts. There are interesting things that are yet to happen. I'm going to talk briefly about what those things are and why I think they are interesting catalysts that might keep the rally running if the macro stays where it is. They keep pumping this fake liquidity in the market. And BTC does not collapse. If BTC collapses, everything that I'm talking about, the whole thesis collapses, right? It is invalidated. And finally, I'm going to close and I'll talk about where we are in the decentralized insurance space and how should you look at this industry, right? So let's start. Let's start with the business model first. So let me just share the comparison table with you guys, right? So here you can see not this one. I want to share. I think it was right here. Okay, so this is a comparison of the 4 leading inference, marketplaces which are crypto native. So Venice, whose token is VVV, and then you have Chutes, which is basically a Bittensor subnet. Then you have Dolphin AI, and then you have Liam, right, which is again a subnet on Bittensor. All 4 of them offer a single API access to all of the models. The key difference between these 4 projects and Open Router is that Open Router also offers you closed source models, right? You have access to the leading models from Frontier Labs. Think Claude Opus 4.7 or GPT 5.3 or any other models coming from these like American labs. Most of them today host open source models, right? These are like almost free or close to free, and not as good or great as centralized models, but some of them are now incredibly close to kind of flipping that narrative as well, right? They will get, there will be a day when when an open source model will be as powerful as a closed source model like Opus 4.7, and Chinese AI labs are getting very close to that, right? You have Kimi, you have DeepSea, all of them are offering the same power when it, whether it is coding or any other work, math coding, which is the two primary things we evaluate AI on. And they are doing both at a fraction of what it takes to do similar work on a Claude or an OpenAI model. And the scale difference is like 99x. So we're already seeing where the world is going. Anyways, off topic, but here is how the unit economics work. Let's take Venice for example, right? How does the back end of of Venice look? Typically, when you go to Venice, when you go to Venice's website, what would you see? As an end user or a consumer, you'll basically see a chat apps just like Claude, right? So you write your prompt and it'll give you a response. That's it. But that's not how the primary use case is. Like as we just discussed, you and I writing prompts on a chat application is not how tokens are getting consumed. AI agents like Hermes, like OpenClaw, they are consuming an agent. What that means is developers or even folks who are building like complicated like AI-driven workflows are using Venice by via the backend. Now, what Venice does is it sources compute from Akash network. Akash network, if you don't know, is a deepen protocol, which is basically an aggregator of idle GPU. Anybody, basically you, me, Kapoor, whoever else. If I have an idle computer with a gaming rig with an NVIDIA RTX 6900, I can download software from Akash, run it, and then let's say if you go to Venice and you do some inference, it will call my idle server if it's available, and it's going to run inference on your behalf. So instead of your command going into a centralized data center, which is what is happening with Anthropic and others who have signed multi-billion-dollar deals with Colosseum when it comes to Anthropic and SpaceX, and Anthropic is paying them $1.5 billion a month, if I'm not wrong. That's $15 billion annually. So
Wow.
can Venice afford to pay that kind of money? Of course they can't. They don't even have that much money. So they found a cheap solution, and that's what crypto is for. Crypto is for folks who are kind of smart. They think around the edges. And so Venice said, okay, let me do that on Akash. Akash already has so many, they've created this
Yeah.
marketplace where people are basically ready to make their idle compute available for anyone for whatever purpose. I can let me figure out a way to use it for inference, and that's what they did. The benefit of doing that is the moment they move to Akash, they move their inference workloads to Akash instead of AWS or Google GCP, their costs go down by 70 to 80%. Right? So that's number one, very, very important thing to know. Now, what is happening on those on Akash network? They are hosting all the open source models there. I spoke about open source models. So there's GPT OSS, 135 billion. Then there are many, many others as well. There are the Llama, series of models which Facebook open sourced very popularly, and I think now they've closed sourced it, but the open source ones are still there. But they're like 3 billion, 5 billion, 7 billion, 10 billion, 100 billion parameter models, right? They host all of them there, and then they charge users less than what OpenAI and Anthropic charges. Basically, they capture that spread difference, right? So imagine if I would go and pay a $20 cost on Open Router to access Anthropic's Opus 4.7 tokens, I can basically go to Venice instead, and I'm saying, okay, I don't want to use Opus; it's too expensive, but I still need intelligence, and maybe the GPT OSS model is good enough for me. So let me do that. And so now suddenly, if for $20 I could get 1 million tokens from Opus with the same $20 via Venice with their Akash network setup, I get 10 million. 10x more.
Venice is basically it not only has money but also private. So I think both these things included is what's making it pump,
We'll
right?
talk about privacy is later. It's a feature, but let's
Yeah, yeah,
understand the
yeah.
business model. How are they making money? The money is the spread difference. Whatever what I would have paid there versus whatever they are paying here, plus the difference between the cost of hosting on AWS versus Akash. That's the margin. That's how they make money. So how much are they making? I think the last numbers that I saw, they're doing around 12 to 14 million dollars in annual recurring revenue. Now that's nothing, Kapoor. If you think about where
Yeah.
they are trading right now versus that number, and let's
It's
check
trading
what.
around 1 bill right now.
So it's trading
Market cap.
at a market cap of 1 bill with a $14 million
Revenue.
ARR, right? So that's something to think about when you buy a token, when people want to top blast. And so, guys, big warning: all of these murphers, these KOLs on X, or some YouTubers as well, unfortunately, they will ask you to top blast Venice at 17 and 37. And this is a token which is like, look at the FTB, Kapoor. It's almost 1.4 billion. So, so let's say $10 million
Crazy.
of annual revenue and $1.5 billion, and 1,000 million is a billion. So I'm paying like what, 700x, 800x, or even more, 1,000x or something like that. Why should I pay that kind of money, right? 1,000. I'm paying 1,300 times their annual revenue for their market cap. So I'm not willing to pay that kind of multiple for Venice right now. But you need to understand that now that the business model is clear, and they're operating like models which are mm, still decent but not cutting edge, right? Plus the fact that it's cheaper. That's a good combination, right? So $14 million ARR, $1.4 billion makes no sense to me. That's one, right? Now, so that's the unit economics, right? So what's interesting is they are growing, right? If you look at Venice stats, and let me pull this up. Like, look at this. Let's start with let's start with. I want to see how many tokens are people spending. So let's see if it captures this number. Okay, they haven't publicly put out this number, but what I found last, Kapoor, was that I think they are spending around 50 to 80 billion tokens per day, right? And that's what people are buying and paying 12 to 14 million ARR. So 50 to 80 billion
Hmm.
tokens per day versus what was the number for Open Router? Open Router processes. I think I found that number here. So
Three, three, three
Open Router is processing 28.29 trillion tokens per week, right?
per
So
week.
that
Yeah.
would be on a daily basis. That would be seven fours or 28, almost
1.2.
four
Right? Yeah.
more, bro. 4 trillion tokens, right?
Oh,
If they're
yes, yes,
spend if
100%.
so 4 trillion tokens per day versus 80 billion. We're talking about orders of magnitude difference here. But still, 50 to 80 billion is not that bad, right? So now that you understand Venice, how much tokens it does, right? Let's talk about the moat. Like, what's the moat? Let me just find out open my piece I wrote. So go ahead, please go, guys, do read it. And if you do like it, do drop a like. But in any case, let me show you what the mode really is. Right, there's basically four things that make decentralized inference an interesting and viable candidate to capture a bulk of the quadrillions that Goldman Sachs is predicting, and capture a decent chunk of it. I still feel like centralized models would still drive the whole thing, but there is interesting use cases there, especially on the enterprise side, that nobody is talking about. The first thing is privacy. There was a survey that Cisco did, right, on consumer privacy, and they interviewed Gen AI folks, right, and they said that 84% of Gen AI users are concerned about data entered in tools going public. So today, what's happening, Kapoor? Every prompt that I write on Claude or OpenAI or whatever, every piece of information that I upload, plus file upload. All of that is
Hmm.
going into training their models.
Yeah,
So I have no
100%.
privacy. What do I share? I mean, they people are uploading their health records. They are uploading their financial statements. They are uploading their portfolio details. Imagine if a powerful agent like Mythos or some other Mythos equivalent comes out, which can hack into, find vulnerabilities in the in the data, and, in the databases where all of this information is saved, and they're able to hack into all of our data. That's crazy. I can't even imagine somebody having access to all of that information about my life. So that's the big moat that decentralized inference projects like Venice, Near Protocol, and many others solve. The the other thing is that OpenAI and Anthropic are structurally compared to log user interactions, right? Because they have to follow certain rules and laws around, compliance auditing, this, that, whatever it might be. They, even if they want to, they can't offer privacy.
Yes,
So
obviously.
this creates a structural mode for decentralized inference projects like VVV, like OpenAI and Anthropic will never compete with them. And this is also, we were discussing earlier as well, this I think is also true for open router won't be able to offer privacy simply because of this reason, right? And finally, the next one is uncensored AI, right? Today a lot of like models that we use, it's all censored, like toned down versions of the models. So you and I, so now there are two classes of people, and I think Haseeb wrote about it as well. Some other crypto KOLs that I respect also wrote about it. That now you have two classes of individuals in the world. One group are folks who have access to the cutting edge models, right? This includes the bankers of the world. This includes the big tech folks of the world who have access to mythos, who have access to uncensored versions of these powerful models that these guys are creating. And then there are people like you and I. We're paying them a lot of money. We're the core drivers of their revenues and their valuations right now, but we're not getting access to the same models. So Venice and the larger decentralized inference players, they can offer you uncensored inference, right? So you have access to the whole model. You can manipulate that model. You can even make certain changes to the weights as well, customize it on your behalf or whatever. So that's not possible. So if I want to build, like, let's say a trading agent, or a fine-tuned trading LLM, which is not as powerful but very close to what I don't know, traders at Jump or Citadel are using, I can do that, right? If I have the
Yeah.
right skill sets. So imagine the unlock. The third is pricing. We also already discussed this, right?
Yep.
Akash ML inference costs are $2 to $4 per million tokens. Compare that to OpenAI, which costs $15 per million tokens. So we're looking at like 7 to 8x difference, right? New flagship models are $30 per million tokens. So now we're looking at a 15x price difference. So if I
That's a
can't
big
afford,
difference.
I
That's a
mean, think
big
about that.
difference.
Like, that's a big thing, big deal for people living in the third world. People living in like countries whose per capita income is less than like $2,000 a month or whatever it is. Um, I'm sorry, $2,000 per annum or less. Countries like India, Africa, do these people not deserve access to this intelligence? Or is it just Americans, or the West, or the the rich Asians? So I think everybody, it's a fundamental right, just like electricity and water. Because when you make something like this, people confuse. People think AI is like social media. People think AI is like internal combustions. No, AI is like electricity. Intelligence is like electricity. It is a commodity. Everybody should have access to it. And so pricing is where I think we will be able to make it accessible to everyone. And the last moat, which none of these existing like frontier model labs are able to offer, is verifiable inference. What is verifiable inference today, Kapoor? When I when I open, like, let's say Claude, and I select Claude Opus 4.7 and I write a prompt and it responds, how do you know that what I see on the front end is just not just text, that they just made it user UI text edit, and I see
Yeah,
Opus 4.77, but actually the model that is running that inference is Haiku, their cheapest
we
model.
cannot tell. We cannot tell.
I can't tell. You can't tell. Nobody can tell. And so that's what verifiable inference is. Because verifiable inference ensures that you have cryptographic attestations, which is essentially some kind of a proof, right? Mathematical proof that the model that you're paying for is what is giving you inference. So I don't have to trust Anthropic. I don't have to trust OpenAI. I just have to, I just use it and I have a verifiable mathematical proof, dude, it works. Right. So this is these are the
Mhm.
moats that make this such an amazing thing. I want to go back to Venice for a bit because I think it's very interesting. They are now the primary the primary they hold the placeholder for on-chain inference, just like Hype holds the placeholder for perp Texas, right? We don't talk about Lighter, we don't talk about EdgeX, we just talk about Hype. Hype is what is now representative of that industry category. Same as with Venice, I think today. Another thing you need to understand about Venice is because it is built on crypto, and it has smart contracts. Smart contracts give you this power that you know that is called composability. What does that mean? It means you can build DeFi Legos. And there are many teams who are trying to build DeFi Legos around inference. That's going to be like very, very cool. That's like frontier technology altogether. One innovation that Venice did was they launched DM, right? So what is DM? Long story short, you basically, let's say you buy VVV from the market at $17 today. You can stake that VVV. By staking alone, you make 18%. You get staking yield 18%. Now,
Yeah,
what do? I take that, um, this VVV can now be used to mint DM. So, in this process of staking, on the other side, not only are you making 18%, but you can also mint DM. That is the token. DM is the inference. It's not really inference token, but it gives you the right to receive inference until you hold DM a day for each DM you hold forever. So
and yeah,
if I have let's say 10,000 VVV and I stake, I get 10,000 DM, and each DM gives me $1 a day of inference forever. So now I have $10,000, 10,000 DM, um, which means $10,000 worth of inference available.
credits. Yeah, amazing.
$10,000. That's
Only
crazy,
in
bro.
crypto. Only in crypto.
How only in crypto,
Yeah.
which means basically not only am I getting the upside of VVV, like if inference grows, I get that. I make money as well, 80%, and my inference is free, pretty much free, right? That's what I think is very very unique about Venice, right? So you're staking, you get, so you're not buying compute, right? You're buying a perpetual right for compute, right? It's your choice. There are teams now which are selling this perpetual right? So they're trying to build like that's the composability layer. And let's say I stake VVB, I get DM. Now I can use that DM, create a new system on top of the smart contracts because they're all composable, and create a new protocol which allows you to buy and sell this perpetual compute on chain. So you create a new marketplace for inference, right? You can
Yeah.
just trade inference, which is so cool. Like if I have idle inference, I'm not using it. Somebody else wants to use it. I am making passive income and even more income. So I made income before. I got free inference forever. I'm now selling that inference to you or whoever needs it in a marketplace which is pricing it on real time demand and supply of inference for the models that my VBB runs, right? Now, compare them to Shoots, which is the other big player. Let me just go back to the comparison table as well. So you will see here that you have Venice, right? Venice is doing 12 to 14 million dollars of ARR. Their primary moat is they offer private and uncensored inference, right? And you have the DM lock-in. So by having DM, you're enforcing folks to be aligned long term, right? And what is the price of that DM lock-in? You get perpetual dollar worth of compute forever in your life. Hmm? Then Shoots subnet 64, one of the most popular projects on in crypto. something that I've been looking at for the longest time. And let's see the Chutes chart because it's been a while since I last looked at it as well. So let me pull that up for you guys too. So Chutes. Shoots is the marquee project of Bittensor. Like the success and failure of Bittensor are sitting on their shoulders. It's that important. So you can see, it's down from $100. Nice, crazy to like $20, so 80% drop. But essentially, even if you look at the numbers for Shoots as well, like they're also doing about $6 million of ARR, right? And they are fully decentralized, unlike Venice, because the core infrastructure through which they deliver all of this, right, parts of it are centralized for Venice, and it is contested, meaning the team says it's not. I don't know. I did a lot of research. I could not find any interesting answers for that. But Shoots is run on the Bittensor Darwinian, competition model. What that means is Shoots by itself runs zero infrastructure. It is the miners. So miners are competing to deliver you inference, and you get the lowest cost because they're all competing, and whoever does the job in the lowest cost is what I'm going to buy from, right? It's a marketplace. And so they're also doing 6 million, but very important that they have about 90% subsidy risk. What this means is that Bittensor runs these competitions across competitions, which is every day 3600 tau is emitted and distributed across all subnets based on their market cap or whatever that number is, variable is. One key function is the people who are participating, miners who are providing compute, offering inference, are doing it because they get tau. The moment that tau starts to dry up or the price of tau crashes, miners would no longer, it will no longer be worth it. Like if I'm spending X dollar worth of electricity to keep my computers running to offer you inference, and the price of tau drops, but my cost remains the same, would I be participating as a miner on Shoots or on Bittensor? No, right? So the real bottleneck is what happens when this happens, when either the emissions dry up or the cost of tau goes down significantly. How would Shoots then incentivize these miners is the big question mark. But Shoots is another big player. Then you have Dolphin AI. Again, uncensored, consumer GPU pool is something that they have built, which is basically, I have idle compute, I bring it to the pool, whoever can access. And then you have Liam as well, something very, very similar, right? So some of the big players. There are others as well. I actually made this. Let me find if I still have it. So I made this tracker somewhere. Where is it? Where is it? Oh, there it is. So I made this tracker. I will share this with Kapoor as well. I'm gonna host this on Versil platform as well, so you guys can access it too. But it basically has a list of all of the projects, right? So you have 7 projects on the inference side, which includes OpenServe, you have Ritual, you have Inference Labs, you have Soul Router, Warden, Octra, Near Protocol, and then you also have those who are I'm sorry, those were all verifiable inference. And then you have 7 on the inference side. You have Venice, DM Shoots, Dolphin, and others upcoming as well. So have a look. Keep this like saved somewhere. The numbers will automatically update. So the price, market cap, FDB, all of that, the market cap to FDB, all of this, these ARR numbers and everything. This won't automatically update, but I'm gonna make sure I keep this updated at least once a month, so you can look back a month and see if something has changed. Has the moats changed? What are the big bear risks around them? And the cool part about this dashboard, it doesn't just show you inference and verifiable inference. It also shows you the compute layer, which is basically the layer beneath inference where all of these companies are operating. Like Akash network is the foundational layer for Venice. Maybe you want to bet on Akash. And then you have the coordination layer, right? 2 companies which are basically creating these Darwinian competitive systems on top of which compute players are operating. And so maybe you want to bet at that level, right? So I'm going to keep tap of those accounts
Yeah.
as well. Now, I want to now move into beat 3, and let me just go back to my stack visual chart because this is the important one, right? So you see these stacks, like 5 stacks of the on-chain inference, industry sector. But some of the things that you need to know is, folks were asking, is Venice expensive or is it cheap? I have no idea, right? All I know is I don't want to pay that multiple. That's the only thing that I can say. But there are some catalysts which are probably in the works. The one of them is, Galaxy Digital. You already know that Barry Silbert, the dude behind Galaxy, is a big tower bull, right? He has launched a bunch of different products, and now he is looking into, one of his analysts. His name is, what's his name? I forgot his name. But anyways, he is planning to publish an institutional grade report on crypto inference. So this would include companies like Venice. It would include companies like Near Protocol, Dolphin, and all of these that we discussed, we briefly touched upon. So that could be a catalyst. The day that report comes out, you might start to see a lot of attention from institutional capital into these projects, and that might be a re-rating, a trigger for the whole sector, right? What I feel is largely underpriced today is also the verifiable inference bit. Like, VVV is nice, it's uncensored and private, but it's not verified, right? So if I can get uncensored, private plus verified, that's amazing, right? And that's where Near is operating right now, and there are other places as well. So the day I think, and I think Near is the front runner for this. And let me also open Near for you guys. A lot of folks have a lot of misunderstanding, Kapoor, that what Near is. Some people, because it's such an old project, right? It has evolved. It started out as as a your plain vanilla blockchain. You could run DeFi, you could run NFTs,
Yeah.
all of that. But that bet didn't work out. But the cool thing about Near is they have Ilya. Ilya is the founder of Near, and he was one of the few people who wrote the seminal paper that is the foundation of modern LLMs, which is attention is all you need. And that paper introduced the concept of transformers, which is the primary technology used for AI training, right? And so he used all of that learning and knowledge. And so today, Near is a powerhouse when it comes to crypto. In fact, you know what, Kapoor? Um, the one of the big one big criticism of Venice was that Venice is not private, right? They would say this is private, but essentially anybody could go. Like, if I am the guy on whose PC on Akash network, right, or on my compute, you are running inference, I can actually go in, write a few queries, and see what inference you're running. So very recently, Near pushed out a couple of updates. One of them was, trusted execution environments. Trusted execution environment is a hardware enclave, and the way it works is, let's say you shoot a prompt. That prompt, the moment it leaves your local machine, is first encrypted. Now, when it is
Hmm.
encrypted, it then goes into the TEE, which is the trusted execution environment. It's a computer with a specific hardware enclave where this is happening. That's where it is unencrypted. Now the LLM works on understanding what your asked question was and then solves it. Now it takes the answer and your original question, re-encrypts it, and then sends it over. Now, in this entire process, the whole thing becomes private. And today, 42% of all activity on Near is now, confidential. In fact, Venice has partnered with Near, and they are using Near's ZK stack to offer, private inference. And so while, Near is up 113%, I think since the last, what, 7 days or so,
7 days.
or
Some
more?
big people
No
are
more,
talking
a
about
little
it
more.
as well.
Yeah, it's up
Yeah.
55% in the last 7 days, about
Yeah.
84% in the last 30 days, but most of the rally has happened in the last week. I still
And
feel
some shilling it.
many people are shilling it, but what I feel is it's still, there's a lot of re-rating pending on Near, because 99% of the janta who was in the market and who was looking at Near, they still think about Near in 2021 terms. They don't know what's new with Near. Near is
Hmm.
now building the confidential compute layer. In fact, they are also one of the competitors to VVV because they offer their own. I was looking at this very interesting website. I'm again good resources. I'll share this with Kapoor. He can add it to the video if he wants. But basically, it compares providers running AI inference inside trusted execution environments. And look at this. You have
Nice.
many. You have Chutes. You have Near AI, right? You have Venice AI, and you can compare them. Now, for the same
Wow.
services to run private inference, Kapoor, I am paying Venice 5 cents for every million token. Look how much I'm paying near AI, 1 cent. So it's 5x
Hmm.
cheaper than Venice. It is 8x cheaper than Shoots. And Venice has run 7x. And near is up
Yeah.
55%, not even 2x. So I
Crazy.
feel like near has I mean near is gonna be like where Zcash was. Let's go look at Zcash. Let's look at the Zcash chart, because I always think about I think Zcash is what it is today because of near intents. If near intents wasn't there, Zcash would not have been to these levels. But let's zoom out in the chart, and let's see what it is. Right. So we're gonna look at the yeah, this is how the chart looks. So you're buying near somewhere here, in my opinion. Not even here. Wait. This was 25, no? So let's look at the full chart. Okay. I think there's some problem with this chart. Let's go to coin market cap. And so Zeke. So Zcash today, if I look at the full chart, all right. Oh, okay. There's an outlier here. Anyways, its last all-time high was in 2018. It went to $528. Then nothing happened for the longest time because there was a lot of delisting events and those things. Then it ran again in 2021, went to $300, which was the 2020-21 cycle. And since then, you will see it was trading between $20 to $30, $40. Then there was a re-rating in September, October, which is when the
Then
Solana
crazy. Yeah.
community went crazy. And this was the time when it first went to how much? $600. And today it's trading at
Yeah.
573. So it basically achieved this number, which is what it, or it is close to. Its all-time high is, I think, $700 or so. But it is
Hmm.
close to that. So this is where I think we are
Or
on
near
near
as
as
well.
well. Yeah,
Crazy.
100%, bro. That's my bold thesis for near, because near has not one product; it has multiple products. It's all built on top of confidential compute and artificial intelligence, and so
This is
they're able
amazing.
to. Yeah. I mean, when I think about the re-rating, another cool thing, there is no supply overhang on here. Everything is out. So there is nobody who will
Yeah.
secretly dump on your ass. Yes, there might be folks who are sitting at 20 who bought here at the top,
Who will
and
take
they're like,
profits, obviously, but
oh,
yeah.
but how many people would have the guts to hold it for so long? I'm pretty sure like
Yeah.
80-90% have already exited
And
here,
it it's
sold
also
on
not
these
about
dips as well.
$20. It's also not about $20. I think from 2.5 to whatever, like 5, 6 is also enough. Like that's a massive run.
No. But you have to understand the thesis. I'm saying everything that I'm
Hmm.
telling you, the re-rating for near is what how will be
Like
similar to the
Zcash.
re-rating of Zcash, and the
Hmm.
reason is confidential compute will only grow. That's reason number one. Inference is gonna be people are going to look for cheaper inference options as well. A lot of what I also read this story, Kapoor, that a lot of Anthropic and OpenAI, subscription price that they offer us compute at is subsidized heavily by VC money, and so because their actual costs are way higher, and they have to you know they can't just be spending billions without making money. They will start increasing the cost of inference, and that's when their story becomes really interesting. Like, it's not just, we've already seen that decentralized inference folks are winning on price by like a huge margin, right? But when they raise those prices, that's when the game is going to change completely. That's when I think will be the tipping point. That's tipping point number one. There is another tipping point that I want to talk about, but let me just go back to this chart. Um, the second tipping point, Kapoor, I feel is going to be more and more powerful open source models. And I feel where China has already shown this, like look at DeepSea. DeepSeek's models are open weight models, and they are a fraction. Like, to do the same work, Kapoor, that I do with my agentic harness, Cloud Code and Hermes. If I switch my model from, I use four models. So I use OpenAI's O3, which kills my thesis. Basically, I build a thesis and then it kills my thesis. I use Claude Sonnet for research and building the thesis. I use Opus for final synthesis and the final research product, and then I use O3 to kill my research. If I would just move, uh, change the model in Open Router from O3 and Opus to DeepSeek, I have spent in just the last 4 days. I was looking at my open router bill, and I'm too ashamed to show you as well. But if I in the last 4 days I've spent like $50. Just 4 days, $50.
Wow.
If I switch to DeepSeek, bro, if I switch to DeepSeek, my cost will be $5 in the last week. So a
Wow.
dollar of inference to do, and you know how much I have produced. Okay, let me just quickly show you as well. But just in, I produced this on chain. I built this on-chain inference dashboard. Not only this, let me show you what else I built. Right, I have done a ton of research. Right, I wrote a Qualcomm equity research piece, which includes a lot of output. Right, I built the state of RWS report, right? I wrote a ton of like research on various tokens, as well. I covered a ton of tokens. All of this I would have done in under $5, which cost me $50 using this. This is where I think the big moat is going to be, Kapoor. Like you're gonna have a situation where powerful models will become more and more cheaper, open source. And when I have a powerful model which is cheap and open source, and I don't have gatekeepers which are preventing me to have access to high quality models, which means uncensored access, and I keep everything private, and I pay a fraction. Like, answer the puzzle, solve the puzzle for me, Kapoor. Who do you think
It's
wins in the
very
long
easy.
term?
It's very easy. So we're
That's the
talking
bull
about,
thesis
yeah,
for on-chain inference,
yeah.
guys. VVV, near, or that's the only bubble. Honestly, I don't
So
care about
we,
any other
it's
project.
crazy. What we talked about is absolutely amazing, and it's the real world. We're talking about like businesses and the processes here, like which are gonna be used. Venice, Near, Dolphin, Liam, and Chutes. But obviously, Near is the safest and the best bet right
Yeah,
now,
I mean,
which
if
is
I
not.
if I just
Yeah.
simplify it for your listeners, Kapoor, uh, just go for the VVV near bubble, and you're sorted. 100%. You don't need to touch anything else because shoots.
Yeah.
I don't know what's going to happen with Tau. I'm extremely concerned about Tau. You remember one of the subnets just ran away after building like Covenant
Yeah.
AI. They used Tau tokens to incentivize miners to build a decentralized training system. And when it worked, they took everything that they learned and they ran away. What stops shoots from doing that or anything else? So because
True.
Tau isn't product market fit, I mean, to hell with them. Go with Near, go with VVV, and that's it. Like, and you've already seen like where we are versus where Open Router is.
Yes,
Like where
absolutely.
where here Open Router is here.
There is
So
so much scope. But
so
wait for the discount though. Wait for the discount. Yeah, the catch
I
up is
mean,
going to be
yeah,
crazy.
yeah. I mean, like, see, look at it this way: 100% wait. Kapoor, I totally agree with you. I think we should be waiting, but you should be thinking about the persona that we are talking to. If it is traders, 100% wait. If you're an investor, like if you think on-chain inference is going to be a huge deal, and I am building a 7 year, 10 year, 20 year portfolio, then it really doesn't matter. I mean, $17 won't feel that pinch for you. But
True.
100%, I feel like the cool thing about crypto, it keeps giving you chances again and again. Like great
Bro,
projects will fall 70.
Venice actually came down 30-40% literally
It
last week,
did.
last to
It
last
did.
week. Yeah.
And
So it
I was shouting on top of my voice, telling my friends, don't buy, please don't buy. And those idiots, they top blasted, right? So so yeah, I mean, wait for it. You can buy a quality project at $2, why would you want to pay $15 for it? Because
exactly,
it's your ROI,
exactly.
right?
But yeah,
Imagine the compounding you get when you enter at 2 versus at 17. When the project, I made that mistake with cards, Kapoor. Like cards has been one of the best performing tokens, but I bought in the last cycle's top. So while cards has run so much, it crashed 90%. I could have bought a high quality project at 10 cents versus buying it at $1. And so
true, true.
that's the value of waiting and timing your entry,
Patience,
whether you're a
patience.
trader or an investor. Patience is the key.
Yeah,
That's it
I'm gonna
from
tell
me,
you
Kapoor.
guys. Don't
That's
worry.
it.
I'm gonna
That's
tell
it.
you guys when to buy, when to enter, looking at the charts. But Venice, not right now. Anything around 600 mil when the markets drop, maybe
Mm,
yes. But bro,
yeah.
thank you so much. This was amazing. And guys,
Mm,
like if you watched it until here, you are absolutely into this thing. And any questions, put it in the comment section. Rohit is going to answer all of them for us. And we will make sure that we are bringing Rohit every single week. Next week, it's going to be a trade that he's eyeing, which can 3x and is one of the safest trade in the market. Not going to say it right now, but he's already researching. Go on his Twitter, you will find that trade. He has written a lot into that trade, okay? And next week, we're going to be talking about that trade on this channel, visually, proper. He's going to talk about it. So, bro, thank you so much. I'm going to let you go now. 55 minutes into the video. Spoke a lot. Have a glass of water. Have a glass
We
of
wanted
water.
to do a 15-minute video, Kapoor.
We wanted to do a 15-minute video. Let's go. Thanks, bro. I will see you in some.
Thank you.
Bye-bye.
See you guys. See you. And I'm going to share all the links with Kapoor. Go if you want to read more about this inference thesis. It includes everything that you would want to know. Thank you.
Let's go.